From the floor of the CME Group, Tim Haefke from Top Notch Trading here on Monday, December 9th with today's Mr. Top Step update. So as we move forward, we're heading into the last couple weeks of the year, and we really haven't seen a retracement. And everybody's talking about how there isn't going to be a retracement. Well, I wouldn't say everybody, but the majority right now says this is so bullish that there's not going to be any end to it. But I'm going to play a little bit of a devil's advocate here, and I believe that we're going to see something happen in the next couple weeks. We do have the spread, actually the expiration, rolling into the switch this week when the December contract goes from lead to secondary and March becomes lead month. And then the weekend after that, we have the total expiration. So the switch starts on Thursday. And believe me, going into the end of the year, we could see a lot of erratic behavior. I've been looking at the open interest since the last roll, and I'm telling you, this S&P has shown no open interest at all, adding or really subtracting to it since the last expiration. So with this in mind, and with how this S&P has rallied, well, now it's like when you hit a ball in the air, and it's a high major league high pop-up. It finally reaches an apex, but it doesn't go up and come straight down. It kind of curves, and it's finding a top, and it kind of works its way, and at this time, it's still working higher, but I suspect we're gonna see a pullback. You know, what are we, 27% higher, 30%, whatever for the year in the S&P, so Top Notch is going two directions. My upside objective in the S&P before we could see the big turnaround this year is 1879 and change. That is what I'm targeting, that the possibilities we could see. However, if we do see this follow through, and I suspect, not just suspect, no more suspicions, I expect it to see some kind of profit taking before the end of the year. I like this trend line that was the top from 2007, where it's at 1596. Is our first objective, but I'm looking more or less for 1370. Hold on, let me look. 1374.5. I can't remember them all, ladies and gentlemen. So that would be my downside objective right now for a full retracement, 1374.5 in the S&P. Now we go to the bonds. The bonds keep trading very kind of nomadic, just wandering around, not really with any conviction. A lot of people say that these things will never see certain levels anymore. And I'm just a futures guy. I can't worry about anything else but what I suspect that I'm looking for. We do have this 20-year, 25-year channel trend that I'm looking at. And right now, if they decide to break them down, they're looking for three key points of interest: 126.31, 125.08, and I believe they'll never get below 124.24, because that's their objective totally if we see further moves south. On the upside, I do have three levels of interest that have been left behind since they've been pulling back, and they come in, and it starts with 137.23, 138.28, and all the way back up to 139.29. So we'll see how the end of the year pans out. It's really important how this expiration goes. This open interest, I want to go back to that point again, is key. I'm telling you, they haven't added any, they haven't subtracted that much. And that's not a very good sign. It means that something's going to give. I mean, if this was really a kind of a bullish move, you might see more open interest. But on the other side, if it was a bearish move, you'd also might see open interest. So if you see a pop in open interest with a drastic break, that means the shorts are hopping on board for this correction. Moving forward, we'll see what happens, and we'll see you next week.